Tax season is upon us. Most Americans need to file their tax returns by April 15th, and there are some important changes this tax filing season that are worth paying attention to, especially if you're an investor.
Daniel Geltrude is a certified public accountant and the author of the book Positive Financial Karma, and he joins us once again here at CBSN. Good to see you.
Good to see you.
So this is the first tax filing season since the GOP tax plan was put into place. Tell us what that means for investors.
So specifically for investors, because miscellaneous itemized deductions went away, investment expenses no longer deductible. That's not good news. Better news is, though, because the tax rates have dropped, short-term capital gains will get more favorable treatment. Another thing is called the QBI deduction, qualified business income. 20% deduction for small businesses, extremely positive. That was put in place because I think, as everyone knows, big corporations really got a great deal with this new tax law coming down from 35% to 21%. Well, what happened to the small businesses? Well, this QBI deduction is a really good thing. Of course, it's complicated because it was put in place at the last minute, but it's a great tool for investors to be able to use if they own LLCs.
The deadline's coming up. Say you're just getting started to get yourself together. What are some of the things that you should be doing?
Well, it's not too late because we still have plenty of time, right? Because people like Vlad go right until the last minute. I remember that from last year.
Yeah, that's right.
So you're going to have until midnight on April 15th. Look, it's not too late. Start putting your stuff together now. Get it to your tax preparer, and there's plenty of time. And if you don't make it, you get to get a 6-month extension of time to October 15th. So all is not lost if you don't make April 15th.
So Dan, some people who are getting their returns now are saying that they're seeing a decrease from the previous couple of years that they filed their taxes. I know that some people will have already gotten a break throughout the course of the year since this tax plan went into effect, but could that be because for some people, the tax plan has been detrimental to their bottom line?
Yes, the tax plan has been detrimental to certain people. What we're seeing in our practice, because we are in New Jersey, so we're really dealing with clients in the tri-state area, particularly high net income taxpayers. Look, that SALT deduction being capped at $10,000 hurts really bad.
There's a couple of people in our control room who are homeowners, and they're saying, I got to pony up a lot more money because of that. If
you are in a high tax state like New Jersey, New York, Connecticut, Pennsylvania, those types of places, you are really going to feel the squeeze of the new tax law.
So say you're lucky and you're actually getting a refund. Do we blow it at the casino? Well, what do we do?
Well, you could you could roll the dice that way, of course. But look, you want to make your refund work for you the best way that you can. So I advise clients, look, make sure you have an emergency fund put in place or contribute to it. 6 to 9 months is a pretty safe area to be in terms of having that reserve fund. You also want to take down high interest, like on credit cards. You don't want to have credit card debt sitting out there. You get a refund, take care of it. And then I would say, if you have some money left over, charity. Anne-Marie, good karma. If you have some extra refund, let's make it work for charity.
Right, I like that. Pay it forward.
Pay it forward.
Always.
Dan Geltrude, always good to see you, my friend. Thank you. Positive financial karma. All about that. All karma.
Yeah.
I want good karma.
But I like financial karma.
Yeah.